Alright, we are live from here, and today we are going to cover why the profit generation machine are important than your stocks. If you have a good profit generation machine, that means you can make a huge profit from that. That's why I came with the presentations where I will explain each and everything in detail how you take your profit from that market, because every market it has begun their basic to advance. If you don't know that what is the basis of the stock market, you can't able to make a huge profit from that. So that's why I came with a micro perspective point of view where you learn something very important, that is related to crude oil. If something which is related to crude oil, that may really major impact on the global economy. And if the crude oil prices are fallen a lot, that means in future, that means in all over the world, the demand and supply of goods and services it going down very rapidly. That indicates everyone and everywhere that in the world its crisis it is happened to begin. That means in every role which is related to your country, in other country maybe its recession it has been begun. So we need to prepare that for this fallen crude oil. So let me explain that. Yeah, if you are a discussion student, okay, now this is a disclaimer for investors. And now have a look at this graph. This graph shows when the 2008 crisis happened. At the moment, Fed, US Fed has been increased their Federal Reserve since that, just because of the hand of bubble is burst in 2008 of real estate. That at a time the US market has been collapsed very significantly. From that moment, US Federal Reserve has been started to raise up. That means there is a very high probability in future there is going to be recession, because of the Federal Reserve when it is had to started to raise up their rates, interest rates for the banks. That means they are not going to they are not going to go and give another person as a cheapest loan, as cheapest interest rate loan. Once the person they don't take any loan from their banks, that means they are not going to be buy something else. Let's say somebody really wanted to buy a house for yourself, but they don't buy because of they they have to pay a more and more interest rate as compared to other. That means this man has been just trying to delay that all the buying and spending things at the moment. That's why the demanding also has been decreased from the market. And once it has happened, there is a likely chance for the country and for the every economy. That means it's gonna be a recession in future, because of once you don't spend in a market, there means that means there is no one company in the world is going to earn from your. That is the reasons why the Federal Reserve it has been increased their interest rates for their bank, and it has happened all over the world as 2010 bubble, as it has happened in 2008. Once zero interest rate policy has been launched in 2008 December, that means because of the interest rate has been fallen quite aggressively, because of the economy has been drawn back very dramatically. Once it has happened, when you see over there the US Dow zone is failing a lot, almost 55%. There is a reason why the Federal Reserve Bank is trying to begin just fly more and more money into the economy, into the people hand, and people try to buy more and more lands, real estates, and buy so many goods, car loans, they take many of loans. That's why the economy has been tried to roll it up, not just because of they are really they are really strong, because of they already there are so many people are already taking many of loan. Because of that they are buying so many stuff like cars, real estates, and that's why the prices of this economy, the prices of the commodity, the prices of the product, it has been increased very dramatically. Once it has happened, the inflation played very significant role here. Because of inflation, it has been increased very dramatically. You can stop that inflation because of the Fed already just rolled out many of money from their own economic sector. That's why the many of investors are believing that once the Fed interest rate has been right up their all interest rate in the economy, that means they try to avoid invest in economy. They try to avoid to invest in the market. Let's say you have seen this is the interest rate which is going up very rapidly. Federal Reserve Bank has been increasing their all interest rate at the peak moment at this time. That means the economy has to rise up once the everyone knows that the Federal Reserve banks already rise up their all interest rate. That means there is a higher chance to the higher chance in the market is going to be crashed very dramatically. There is no chance for the every investors those who are looking for a good investment, and over there the negative rates also rises. That's why the once the Federal Reserve Bank has increased their all taxes, all the interest rate, that means this market impacted very badly. Now have a look at this oil prices over there. The price from the panic reloading over there, and when the oil prices is slowed down very rapidly, that's why in the world there is a very likely to recession is happen and across the world, and it may be happen few of time, but many people don't believe that in the world they feel if the oil is not gonna be up, its oil is not gonna be up. That means the demand in the economy, the demand in the market, it's very low. If it is low, that means the company is not gonna be earn money. Once the company is not gonna be earn money, that means they are not gonna be pay more taxes to the country. Once it does not happen, that it is really hard a chance for to grow their economy and grow the countries, and that's why the country has been collapsed very few years, and it has happened just because of only that. Now have a look at this oil prices, which is fallen 83% in 2020, and just because of the all the COVID sanctions which has happened all across the world, and everyone is panicking what's gonna be happen in the world, and just panicking, and that's the reason for this the oil prices which is really fallen a lot. It's quite significantly taking a significant portions over the bottom, and once it is happened, and the impact over the economy, it is began to open. Once it is open, then the recovery of this market it is beginning, and once it began, then the oil prices also happen. This is the correlated to the economy, correlated to people, this is the correlated to all the businesses. Once businesses working well and public is just people are spending a lot, that means the oil prices it's gonna be up. Once the people are just less spending over there all across the world, that means in the world there is a higher chance for the people are not getting the right kind of concept over there. So this is my side where I explain what were the main causes of oil and the fat reserve. And once I would like to summarize that video which I have just telling to you, and over there the economy is fallen a lot, and the demand in the economy it has been goes wrong. Once it is happened, why it is happened? When the inflation is gonna be very high. Once it is happened, the inflation is gonna be very high. There is a high likely chance to the Fed it's gonna be raised their rate high. It's gonna be right, raise their rate very significantly. Once it has happened, then the average market will collapse very badly, and it has happened just because of that. Now, and another thing which I have told about the oil prices, when the oil prices are just trading at the middle of this economy, that means it is good. If it is going to be very high, that means it is a bad signal. The everything else in the world which must be balanced. Once it is balanced, then there is a high chance for the people and investors to make money in the world, and it has happened just because of that. So this is my side, and I explain everything else. So, all right.